Welcome to Market Call. Thanks for joining us today. I'm Morella Fernandez. Jeff Parent on the show. He's Chief Investment Officer at Castlemoore. He's going to take your questions on technical analysis. Here's how to reach us. Call us toll free, 1-855-326-6266. You can also email your questions, marketcall@bnnbloomberg.ca. Jeff, thanks very much for joining us today. We had the attack, Israel attacking Iran last Friday. This is ongoing now. Have you noticed any new trends as a result of that geopolitical situation?
No, not really. Maybe intraday there's some effect of these geopolitical events. The trade issues with the U.S. and the rest of the world have been the biggest cause, which started this decline in February down to April. But we've seen a very large increase. A rebound, that is, in the markets. A lot of money going back into the markets, regretting selling perhaps. So we're at the top now, very close to where we were at the peak earlier in the year. And where we go from here, though, is going to be determined by how some of these issues are resolved. And this is very important to watch.
TSX has been hitting record highs for the close. The S&P, you've noticed stickiness. Tell me at what point it's sticking and why you think that is.
Yeah, well, my comments are mostly going to be around the S&P 500. We look at that, and there's this technical analysis pattern called a double top, and it usually happens where you hit a hot top, a pullback, and another top. And the issue there is people are deciding now whether or not they're going to buy. So people like portfolio managers, not me, just me, but everybody together collectively feeling encouraged. So I think people are going to be looking more at the earnings than what's happening in these other places of the world. They don't have huge, even though it's a big geopolitical event, you can draw in other countries. How it affects the economy is not really well known yet. And so the trade issues are the much bigger issue. That seems to be resolved, or is going to get resolved. We're seeing the second quarter results coming out very shortly in the next few weeks to a month. And I think that's going to drive the markets one way or the other. So if you were looking to buy into the markets, if you've got cash, I would wait to make sure we break that 6,050 level, for example, or 6,100 level on the S&P 500.
When you are talking to investors, how would you say, what is their mood? Are they feeling more optimistic? As you said, the tariffs were the deep dive and hit people very hard. Or have they rebounded in sense of their optimism of the market?
Well, yeah, that's interesting. There's a lot of pessimism because it's goes beyond looking at the markets. People are pessimistic because of what's going on in the U.S., right? I mean, closest border. People are thinking about how they don't want to go down for vacation or travel down there, and they're not really thinking about the market. So when I'm talking to investors, they're surprised to know that their portfolios are more or less where they were at the beginning of the year. They're aware of the decline. They're not aware of the rally. I mean, unless you're paying attention closely. So there's a lot of pessimism still. So it is interesting to see how the markets have recovered. I'm a little bit surprised to see that last month was a very good month. Very strong, actually, driven by a lot of the names that you see typically at the top of the S&P 500, the tech names of the NVIDIAs, even Tesla to some degree. It pulled back from this thing. Yeah, that's a whole other story. But so it looks like the markets have done well, but there's a big decision point coming, right? And the level that we're at right now is a big resistance point. So if we can break above that, I think we're going to continue on for the rest of the year.
What's your feeling as if that's going to happen? That point is going to push past.
Yeah, so thank you. We don't predict. The technical analysts don't make predictions, right? What we do is we look at the patterns, we trade the patterns, and so we'll do a buy or sell. So, maybe I've got about 15% cash in my main, what I call my North American diversified portfolio. And I'm going to invest that cash if we can break above or maintain this level or move higher, and I'll raise more cash if it moves down. So I'm going to take the trading action or have a trading action plan that goes along the direction of the markets. And we'll let the markets
So you're ready to
this.
pivot either way?
Yes, that's right.
Got it.
Exactly.
Okay. Want to take a quick break. We're going to be back with Jeff Parent of Castlemoore. He's taking your questions for technical analysis today. We're back in a moment. Welcome back to Market Call. Let's go to an email from Bill. Bill says, I'd like you to have your technical analysis on Visa. So let's take a look at some of the Visa charts and have a look there. What's your take from what you know of Visa?
Well, long term, I remember when this company went public, and it was very exciting. done very, very well, like an average rate of return of 20%. I'm looking back over the past 12, 13 years on my charts here. And 20% per year price appreciation, plus it pays a little bit of a dividend. It does take pauses though, and it looks like it's taking a bit of a pause right now. The drop right now is, it looks a little bit concerning. I know yesterday it fell apart a little bit. But it's still well within a normal trading range. So if it can hold above the 330 level, I think it's worthy of buying on this dip. But you got to be very careful. This is like what I was saying, you have to have a trading plan. And so the trading plan is basically 330. If it drops below that, you sell if you're owning it, and if it holds, then you buy or maintain it.
And we should consider what happened in April, sort of a one-off. I mean, how does that disrupt the pattern when you see something like that? Yes.
Well, you see, this is maybe like a double top formation. We have a couple of tops here, and there's somewhat similar price. And we broke above it. They don't always hold though. And technical analysis patterns don't always give you everything you need. So you got to be careful and be willing to, reverse the situation. But I'm not sure what the news was yesterday, but it was it's about a 5% drop and quite a reversal from the $370 that it was at recently. So I don't follow the stories on every single stock,
yes,
but I look at a chart. And so something bad has happened. It looks like it's picking up a little bit of steam. I mean, there's some solid support at 315. So if it breaks the 330, I think it'll go down to 315.
Got it. Okay. Let's go to the phone lines. We have a caller on the line, Chris from Victoria. Hi, Chris.
Oh, good afternoon. Thank you for taking my call. I was hoping to have the guest's opinion on Starbucks. I've taken a position in it. I'm up about 5%. It's a recent position at this sort of 5-year low trough, and I'm wondering if you see the same as I do for a few years hold at least. Thank you.
So
right.
What do you see when you look at this? And again, it fell off the same as everybody else did in April, but it's also undergoing sort of a renovation, if you will, inside and trying something different.
Aren't they always doing that though? New management, replacements. Yeah, I know there's been a lot of enthusiasm, and I got a chart, and obviously you can't see this, but I'm going to describe what I'm looking at and things that pop out. The price today is where it was back at 2019.
How many years do you have up?
Well, I can vary it very easily, but right now I'm looking at like 15 years.
Okay.
And then I zoom in. It's sort of helpful to look at to see where the stock's going. Like maybe it was $1 stock, now it's a $10 stock heading to 20, right? Or in this case, it's been going up and down quite a bit. So a trading range from 57 up to like 120. That price back in 2019 is where we are now. So it kind of gives you, it's a very broad picture, but very broad sideways motion. And I wouldn't buy the stock. A 5% move, that's a very short-term movement. If you're looking for long-term, very tough to read because it really fell apart from 116 to 76. I mean, that's a huge drop, and that's just that's just this year. It's recovered a bit. It looks like, the volume is kind of drying up a bit, and that's something else you want to see. So on any sort of rally, you want to see some good volume. So basically a new round of people buying back in, so maybe new buyers, maybe people that sold out are buying back in because they like the name. I wouldn't touch this stock. It looks just very jumbled. And I think, if you're going to buy it, it's going to hit some resistance above 100. So if it breaks above 100, the resistance is gone, and I think it's got a new upward trend. So I would be waiting for that, even though you can go out today and buy it for 93. There's a lot of other stocks that you can look at, alternatives. And that's the great thing about the U.S. markets in particular. There's a lot of very liquid stocks out there that trade billions of dollars every day.
Got it.
And so, but it kind of looks like the stock might be in the low 90s, mid 80s for a while here.
Hanging out there. Okay. Let's go back to the phone lines then. John's on the line today from London with a question. Hi, John.
Hi, Marilla. Hello, Jeff. Jeff, a quick follow-up on Visa. Big merchants like Walmart and Amazon are threatening to use stablecoin to reduce reliance on Visa transactions. That was a hit last Friday and on Wednesday. My question's on Ino Data, I-N-O-D. This is a global data engineering firm with rapid growth in revenue and profit. It's got some resistance around 55, some more around 75, but I see there's quite a few analysts with targets in the $75 range. What's the chart telling me here? Are we going to beat this recent top and then go after that 65 top? Thanks very much for your opinion.
Thanks for the question.
Yeah. So this company has transformed itself. So this is one of the things that I notice as well, and it's something that volume tells you. So right around this jump up here. So before here, no volume at all. All right. So something transformative happened that caused this jump and to where we are now. And it's been going sideways. So it's kind of hanging out, I think, waiting for the next piece of news. And just to put it in perspective, you can't see it, but that jump was a 75% jump. Okay, so very, very big jump.
75%
Percent.
Thank you.
Yes, yes. It goes from like 20 something up to 40 something, right? Almost, it was like, you know, on the single day, that's what it did, and it continued to go, and you can see how it's been. So sideways motion. It looks very interesting. I got excited just listening to the description of it. It was like a sales pitch, right? And you think, okay, it's got to have some form of growth, right? So probably some contract. So if there's some follow-on to that news, it's going to move higher. Fundamentally, that's one of the things you look for. But technically, you got to wait till it breaks out. The resistance I see is more right about where it is right now. It's kind of broken above that resistance,
which is the 49.50.
Yeah, so I wouldn't 55 is traded up there, but resistance to me is where a lot of people were selling. Okay, sort of the top end of the buying and selling range, and so that is above that right now, which is about $45, $50. So we're very close to that level. So this looks like a buy actually, and I think something's happening to it. I will look into this story because I find it to be very interesting. I'm always looking for growth ideas. I've never heard of this company, and basically I don't think anybody's ever heard of it before it broke out.
Except for John. Okay. Yeah. Let's go back to the phone lines and get another caller. And Rob is on the line from Calgary. Hi, Rob.
Hi. Thanks for taking my call. I'd like to hear Jeff's opinion on freehold royalties. It's been trading in a range for a while now, and I just does he see any indications of a breakout or continue sideways for a while? Thanks again. Stay cool during the heat wave and have a good weekend.
Thanks for the question. Let's take a look at the chart here. What do you see?
This long steady decline. I think this pays a pretty good dividend, right?
I'm not sure. Let me look it up.
Yeah, I was just trying to look it up. But it's been on a decline, but it doesn't move too much. Like this is not a stock that's gone from $50 down to $10, right? The decline has been, I think, equal to perhaps its dividend. So very long term, it's still in a downward trend. It's got to break above. It's getting very close to the top of that downward trend, though. And the downward trend's really kind of easy to draw. It's a little bit harder on this scale here. I'm just looking. But you can see a couple of parallel lines here. It captures most of the data. So it's just sort of breaking out right now. And I think ultimately, if it continues here, it looks like a good purchase. I think there's a lot of support probably at the $12.60 level. I mean, it's very specific. And so if it can hold above that, it's worth holding on to. And I think maybe perhaps buying. I think once it gets into the towards the $14 level, I think that's going to run its course. Very strong resistance, and a lot of trading has occurred at that level over the past couple of years. So to get above that would be very difficult. So limited gains, and if you have the dividend, it'd be great to mention that as well.
Got it. Okay, I think the dividend is 8% annual.
Yeah.
For freehold royalties. Okay, we're going to take a quick break. Jeff Parent is here with us today. He's going to take your questions for technical analysis. Back in a moment. Welcome back. Thanks for joining us. Let's go straight to your phone calls. Elliot is on the line from Hamilton, Ontario. Hi, Elliot.
Good afternoon. Please, Chubb, the world's leading P&C firm, has been muddling along between 280 and 300 for the longest time. Would your technicals suggest that it might break out to join its other PNCs at all-time highs, or is this thing just going to keep, muddling along? Thank you.
Thanks for the question, Elliot. Chubb.
Yeah, well, long term, and I really do mean long term, going back, 20, 25 years, it's done very, very well. Another one of these stocks on top of the dividend averaging about 8-10% annual return. And so outside of the dips that everybody else seemed to have seen back in 2020 and 2023, it's recovered and gone on to make new highs. In fact, this was making record highs, all-time record highs, back in April. So it fell apart like with the rest of the stock market, but not that badly. And right now it's at a very good support level, like literally, almost exactly at the support level yesterday, and it's bouncing back. So it looks like a good stock. These things do take pauses, especially after making new highs. It was a big loss of momentum, a little sharp uptick in it to make this all-time record high. And so I think it's, we're waiting to see what happens. Everybody's waiting to see what happens with the stock market, and this is pretty standard. So I think, it looks like a good buying opportunity, especially if you're going to trade a short-term trade. And I think the upside short-term is about $300, so maybe a $10 potential upside. Now on the downside, you want to make sure you're not really want to be holding on to this if it drops below, say, 270. That would indicate something has gone on with this stock and it's lost its momentum, and it could be the beginning of a downward trend. So something that you want to, if you have a position, you would typically start reducing that position. You don't have to sell it out immediately, but certainly reducing your risk.
Okay, so you said 270 at the bottom end. It could get up to 300. What would you do right now? Would you buy in if you were interested in the stock?
Yeah, for a short-term trade, looks good. And then see where it goes. And just like, when you, I like to scale in and scale out of positions, especially if you're trading actively and for the short term. So a scaling in, you would take a half position. So if you got a portfolio, a half position might be 1 or 2% of the portfolio if it's a diversified portfolio. And then add 1 or 2% of the value of your portfolio as the price moves up. It's better to do that. And it doesn't make sense because, again, why would not buy it at 284 if you think it's going to go to 300? Put in a full position. Well, that's not the way stocks work. Keep in mind, right? You can't predict these things, and I think a lot of people really need to listen to that sort of advice.
Okay. All right, let's go back to the phone lines, and we have Kevin, who's holding on the line from Kingston, Ontario. Hi, Kevin.
Hi, thank you for taking my call. My question is on our Canadian TD Bank. It had some problems in the U.S., which are behind it. Looking at its graph for the last 3 to 4 months, it's been steadily climbing. I've thought about maybe getting in at this price, or do you think it's leveling off? If you don't think it's leveling off, where do you think it might level off? Thank you.
Right. Well, we can look at where it was in the past, and it hit a high of about $108. But that was back in 2022. Yes, and this thing's been in the doghouse for a very long time, literally up until about May of this year. So for the past month and a week, it has really done well. This is one of my biggest positions. I've got TD and CIBC as my bank positions.
Did you buy it at the end of last year?
I bought it a long time ago. I've just been burying my head in the sand, unfortunately. You hear the bad news and you think, okay, like back in last year, back in September, it looked like it was making one of these moves that it's making now. It hit a high of 87, and then it drops back down to 73. And a lot of that was over a period of 1 or 2 days, that drop.
Wow. Okay.
And it's done that back and forth. And you're just hoping. So it's finally breaking out. And I'd be cautious right now. You look at some of the other banks, it is very, very overextended. So I'm riding the wave right now. I think it could break above 100 very easily here. It's only a couple bucks away from that. And $108 I don't think is out of the question. It's not losing momentum. Momentum is like peaking right now. But I do see it dropping off in volume. So that indicates potentially a sideways motion or a pullback before we get to the 108 level. So that's what I'm counting on right now in the position. I probably will continue to hold it. I do like to have exposure to Canadian banks just for the dividends, which currently about 4% or so on average for banks, 4 or 5. But if it drops back down to $90, I'm definitely going to consider exiting this position.
Got it. Okay, let's get one more caller. And Joe is calling from Sarnia, Ontario, with a question. Hi, Joe.
Hi. My question is on Dividend Split Corporation. I've been watching the up and down for 5 years or more, and they've continued to pay the same dividend, which is a very high payout ratio. Is that sustainable? Because I'm starting to accumulate some at this range.
Yeah, these there's a lot of split stocks. So basically, a single unit is created. It's like a mutual fund. I'm not totally familiar with this one, but I'm guessing it holds 15 stocks, perhaps, and I don't remember which stocks they are. But there's ones telecom, banks, utilities, and so they take a preferred unit, and so from that single unit they split it into a preferred and a common share. So this is the common share we're looking at, not the preferred. And so basically, the preferred share is owning a guaranteed payment, like usually it's around $10 a share, and a guaranteed dividend. The common share gets everything else. And so this has been around for a long time. It doesn't surprise me that if the underlying entities increase their dividends, they will benefit the common shareholder more because it's a bit of a leverage play as well. So yeah, I mean, I wouldn't worry too much about this. It looks like a bit of a kind of a safe thing. Now, you got to keep in mind that this, when I say safe, it was $7, $8 not too long ago, and then the dip last year went down to $3. So I want to do a little more investigation. I'm not making a recommendation to go and buy this until, I don't understand this as much. I kind of want to know why it dipped down to that level. But it is coming to more of a historical long-term level, which I think is stable. And I would say overall, this is probably a stable investment with a stable dividend. I wouldn't be too worried about the dividend. When you have something that incorporates other stocks together, do you tend to go back and look at each of the stocks as part of that and the trend, or do you just pay attention to the line chart for the combination? Yeah, well, when you have, especially like 15, 20, 30 stocks, right, and if they're in the same area, and they could be financials, they could be dividend-paying stocks, telecommunications, right? That individual characteristic of those individual stocks tend to blend in together, so that the risks tend to go down when you're looking at an overall package. I mean, this is why people invest in mutual funds and diversified products like this. So you have to worry more about the industry, obviously. I mean, some of the stuff I'm saying is pretty obvious. I get what you're saying. Yeah. It's a sector thing, so you don't necessarily have to pay attention to each stock, right? And what's happening to each of them. That's right. But I would want to see and identify why it dropped like this, and I can't do that on the show. But when I look at the chart, there's some fundamental characteristics of the structure, not the individual stocks, but of the structure that I want to look at. But it looks like it's recovered, and it looks like nice sideways motion. This is something people would probably buy for the dividends, not for the capital gains. Got it. Okay, we're going to take a quick break. We're going to go through Jeff's past picks when we come back. Welcome back to Market Call. We're going to go through Jeff's past picks from June 24th of 2024, so about a year ago, just shy of that. At the time, he picked AltaGas on the TSX at $30.48, now up to $38.28, so a 26% upside return, a total return of 30%. Do you remember what you were seeing in the chart for AltaGas that you liked? Yeah, when I develop a portfolio, this one that I have is called the North American Diversified. So diversified because it has growth stocks, it's got predictable stocks, and it's got income type stocks. So this is one of those income stocks, and that diversification helps reduce the risk. That's my type of form of diversification. So AltaGas was a dividend play, an income play, strong dividend. And the business is executing, obviously. Like, this is a good return for this time period, especially for a utility, but for any stock. And I continue to hold it, and it's one of my bigger holdings. So I still like it, still hold it. I don't see anything wrong with this. I think the dividend is going to continue as is. Now, it's got a weird history because, like some of these larger, well-known Canadian companies, like TransCanada Pipeline or TC Energy, they've gone through these situations where they lose a lot of value when their dividends get cut, or even get into this terms of being concerned of getting cut. So anyways, I think it's good. How often does it happen? Too often. Okay. yeah. So because, not an unusual circumstance. No, it's not. I think most of the companies are pretty good footing right now, though, AltaGas being one of them. But I do watch for the fundamental quality. Got it. Okay, let's get to your next past pick, which is Microsoft. At the time, it was $447.67 American. Now it's $482.30 US, so 8% upside return and total return. Do you still like Microsoft? I mean, I know the tech companies have come back. Some of them have not come back fully.
But going forward, do you still like Microsoft?
Yes, and I purchased this a long time ago in the $300 range, and so my clients are making a lot more on this. It's hitting all-time record highs right now, and I continue to hold it. I think it's got potential a lot more upside. I also have it as an exposure. To some degree, I want to have a relative performance, and it's hard to have a lot of little minor companies and have positive relative performance, right, to an index that's very weighted in technology. So this is my idea of the exposure to technology. I've got a few other companies like this. Microsoft is the biggest one, though.
Got it. Okay, let's get to your third pick from June of last year. Mueller Water, which does water infrastructure, that kind of thing. At the time, it was US 1761. It is now at 2348, a 33% return, total return 35%. Tell me a little bit more about them and why you chose Mueller Water Products.
Earnings. And so last year, a little over, more than a year ago, the earnings, consecutive earnings were doing very well. So from fundamentally, they hit the screen, and then the chart looked really good. And so we bought in right around that price, that $17 price, and so we're doing very well with it. It's stabilized, so that earnings has sort of stabilized as well. So we'll see where it goes. Maybe there's a second round here. But they make the fittings for like cast iron fittings for water infrastructure. And so, as cities spend money on infrastructure, they're the beneficiaries.
Got it. Okay, we're going to take a quick break. Back with Jeff Parent of Castlemoore. He's taking your questions for technical analysis. We're back in a moment. Stay tuned. Welcome back. We're going right to the phone lines. Alan is holding on the line from Victoria with a question. Hi, Alan.
Hello.
What's your question?
My question is on Exchange Income Corporation, a dividend payer out of Winnipeg, Manitoba, please.
Yeah, 4.6% yield, I believe, and the chart looks really very decent. Very steadily increasing with the usual counter movements, as in it's going up at about 10-11% average return, but every once in a while for a period of a year or so it'll drop back down. So right now I think it's at an all-time record high, or very close to it. We might see a little bit of resistance, but it looks like it's got some good upward motion. And this looks like it's trying to break out, and I think it can do that and go on as it has over the past many years.
Yeah, it looks like it hit at the end of last year 59.27, so getting close, as you said, to that all-time high. Is this something you would invest in at this point, or is this something if you just hold?
Right. So, okay. So if you have it, hold it. Right. And if you want to look at a short-term trading strategy, there's not a lot of support below $50. So you want to start reducing below 50. And it's real simple. You just look at the chart. You can't see it, but there's like where most of the volume is traded over a period of time. And you'll see price bands. So right now that price band is like almost exactly $50.
Got it.
So there's a lot of trading at $50. So if it drops below that, then people you think about the psychology of somebody owning this stock, right? I'm losing money now, or this is going in the wrong direction. So everybody thinks the same way, kind of, right? And if you on the same day or over a period of a week, everybody starts selling, right? The price drops further and it goes down. So this is sort of the psychology that drives the prices. You can look at value, and sometimes value and price are aligned. But when you have panic selling, or people want to sell because they just want to get out of the stock, they don't want to lose anymore, right? They happen at these price points. So that's where I'm picking up this $50 level. But I mean, it looks good, and I think easily could drop back down to about $54. So keep that in mind. You have to have some price expectation and action at those steps. I wouldn't be selling it until it hits 50. But right now, yeah, I wouldn't hesitate to buy it.
Got it. Okay, let's go back to the phones. Bob on the line from Toronto. Hi, Bob.
Yeah, hi. Thanks for taking my call. Jeff, Cargojet was as high as $140, and I think it was as low as $60, and is presently at around $83. So what's your analysis for the stock? It's certainly very volatile. Thank you.
Yeah, well, it had a heck of a run up until about 2020, the end of 2020, where it was trading at about $240. So the drop that we see from that level mostly occurred over a period from 2020, the end of 2020 to 2023, so about a 3-year period. And I mean, it was pretty significant. A lot of fundamental differences, and it made a new low. When I say a new low, not an all-time low, obviously, but a low that it hadn't seen since 2020, or even it's trading at 2018 back at these levels. So that's a big turnaround. It looks like it's sort of picked up, and I'll identify some nice volume. So there was some nice volume going on around the dip here. If you could come into maybe a 1-year chart or something a little bit tighter.
There we go.
Yeah, so around this bottom and this level right here, there was a lot of buying. So that indicates to me that some people are adding this position now. They feel that there's reached some sort of value equilibrium, and that's good. So taking a little bit of a pause right now. I would look at the stock and maybe purchase it, and the expectations here is that it could get back up above $100, maybe $105, $110. Before the end of the year. Now, on the downside, because we've got to always look at that, you've got to be very careful if it drops below about $83, right? That's the exit point, or the beginning of the exit point. It's still long term, still on a downward trend.
Got it. Okay, we hope that helps Bob out. Let's go back to the phones. Jeff is on the line from Milton, Ontario. Hi, Jeff.
Good afternoon, Bob. My question was on Constellation Brand. It looks like it's at a low or a double bottom. Just wondering if you see upside or further downside on this stock. Thank you.
So I can't tell, Jeff, maybe you can tell me, is the bottom where we are today, I think at 161, is that lower than it was sort of February, March?
Yes, so that is the first bottom, and that was the absolute trading low on that was right about $161, which is almost exactly where it is right now. It's been a very steep decline, though, and it's hard to see this on this scale, but that is a very steep decline because it's a lot of price drop from basically $195 to $160. So $30 price drop, 15% decline over a period of a few weeks, basically the end of May, June. And that is very concerning. The volume is starting to pick up, which means that the buyers are coming in, but not quite to the type of volume that we saw on this drop. So this is sort of the beginning of a major decline. Then we have a continuation, some hope, and a continuation. So this is a very standard pattern for stocks that don't recover quickly with some fundamental, some positive turnaround type news. So you got to be very, very careful. It is up today, so that's a positive sign. If you're going to be buying this, very small position, because it's at this point, because the volume isn't quite there yet, and there's absolutely no support at this level, right? So just about everybody's losing money on this stock, and so you have very, very small amount of patience.
Got it. Okay, we're going to take a quick break. Jeff is sticking around. We'll take more of your questions when we come back. Here's how to reach us. Welcome back. Herman's been holding on the line to talk to Jeff. He's calling from Montreal today. Hi, Herman.
Hello there. My question is on Propel Holdings, PRL. I wanted to know if this is a typical cup and handle, the cup being from February to May, and the handle being from May to presently. I'll wait and hear your answer. Thank you.
Okay, thanks for the question. We'll pull up Propel Holdings here for the 1 year. Maybe we can scale it back a little bit more, too.
Yeah, well, this is actually pretty good here, if you don't mind, because, and I love this question. This is a pattern. There's a lot of different forms of technical analysis. I'm more quantitative. I like to look at charts and tables. But when you're looking at a chart like this bowl here is the cup, and that's the handle.
Got it.
And so that is a good pattern for buying, and it looks like it's happening. The stock is going higher. So the pattern indicates a buy. And I would say on that, buy.
What are some of the other patterns that indicate a buy?
Well, there's other patterns. Sorry, what was the question?
What are there other patterns that also indicate a buy? If a cup and a handle indicates buy, is there another pattern people can watch for that also indicates a buy?
Yeah, so this is, there's a lot of reversal type patterns where stock's going down. So it trades, I don't know if I'm doing this reverse here, but it trades in a downward motion. So it makes highs, but the lows are lower, right? And so when you can form parallel lines above this. And then when it breaks above those parallel lines, it's reversed, and that's a buy signal, right? So that's a breakout. Head and shoulders is another common one, and that again is a reversal pattern. So where it goes, makes a new high, makes another new high, but the third high is not as high. So that's like the head and the two shoulders, and it usually indicates a continuation on the downside, or there's upside down head and shoulders as well. But this is great. This is a great looking pattern here, and it looks like on an upside we could see mid 40s. Before the end of the year.
And it's at 35, 34 right now. Okay, let's get to another phone call. Mario's on the line from Brampton with a question. Hi, Mario.
Hi, Marilla. Hi, Jeff. Thank you for taking my call. Been watching your show, and I was listening about Visa. And my question was on Mastercard. I've been watching the rapid decline over the last few days, and I'm wondering if it's going to continue. Do we see further downside, or we're going to rebound soon?
Right. Yeah. And yesterday the stock was off by 5.5%, and it's continued down again. And it's the high was about 591 right here. So it's pretty big reversal, and you want to see how this plays out. There might be some rebounding. I don't see like with this drop here. There was a lot of volume, so the volume would have been peaking like this. The volume here is not as much. So you've got to be really careful. This might not have played out, and the selling might continue. So there's always people, like on some bad news, right? There's going to be a sell-off, but it's like an initial sell-off, and the price comes off. It looks like a big drop, but it could go a lot further. And there's continuing selling as people reevaluate the situation, unless Mastercard comes out and says something positive, or something, maybe that news was short-term news and something's, countering that in the future. But we can see a drop back down to the like the 470 level pretty quickly here, which is where we were back here before we see any support. So you want to let this play out, let the markets dictate where it's going, and play it from there. You let it find a bottom, and let the value players come in and buy it, and you'll see the volume typically when that happens.
Got it. Okay, let's get to Robert from Toronto with his call. Hi, Robert.
Hello. Thank you. I'd just like to know about Secure Waste Infrastructure, SES. Thank you very much.
Okay, thanks for the question. Secure Waste, that's an interesting looking chart.
Yep, it's a very hard one to read right now because we've had some good news over here. And you know how I know it's good news is because the price, everybody's wanting to buy it, right? But there's obviously something wrong with the fundamentals afterwards. It looks like a very difficult stock to analyze because it's in this, some people call this a downward trend and it's breaking above, but it doesn't look like that. So it looks like it's trying to resolve some fundamental story. So there's some people buying and selling, don't really know where it's going. The drop that occurred here in April was very significant, and we haven't been able to come above that level, which is right now about $15.85. It tried, but it didn't succeed. So, and it's starting to pull back a little bit. So I would avoid this stock. It looks like it could probably hit about $13.50 before it finds a bottom.
Got it. Okay, I do want to get to our last caller quickly.
Yeah.
Duncan's on the line from Oakville. Hi, Duncan. We're running out of time. What's your question?
Thank you. Good afternoon. Sorry. I'd like to get Jeff's technical analysis between Constellation Software and Celestica. Which one would he prefer for short term? I'll hang up and listen to you.
Okay. Thanks for the question, Duncan. We'll pull up both of those line charts and have a look.
Yeah, Celestica looks good. I've been following the story for a long time. My brother used to work for the company. Constellation Software has just been around for a very long time. I'd probably go Celestica just because it's in a nice upward trend, and they're obviously doing something right here. They are at a record high, and it might be hard to get above this level. But I think there's enough stability in the stock. Constellation Brands, Constellation Software, thank you, is a big consolidator. And if you bought that one a long time ago, you're doing very, very well. But I think, if you're looking at growth and potential for where we're a year from now, I think Celestica has more upside.
Got it. Okay. We are going to take a quick break right now. Stay tuned. Just going to share his new top picks when we come back. Welcome back. Jeff is here. He's going to share some new top picks. His first one is CN Rail on the TSX. CN Rail, obviously a good Canadian company. What do you like about it moving forward?
Well, you just said it. It's a Canadian company. I've been overweight 75% U.S., 25% Canadian for a long time. And I'm trying to reverse it and repatriate some of that U.S. cash. It's definitely hurt a little bit having that U.S. exposure because of that currency condition. But I like CN. It's been through a lot. It's been at a much higher level here. You can see it's dropped about $40 just in the past year and a bit. Pays a fairly good dividend, and they're spending a lot of money to improve their infrastructure and grow a little bit. So hopefully that'll translate into some potential growth. And then you pick up a dividend along the way as well.
Okay. So generally speaking, because of tariffs, and I know that's not something that you necessarily pay that close attention to, but would that have kept you away from the stock at all?
U.S. stocks, you mean, in general?
No, the rails in general.
No, not. The tariffs are going to all sort of resolve themselves shortly, right, or some short period of time. The markets look forward 6 months to a year anyways. And so what's happening right now with the trade battles and all that, I think are really not relevant to today's price. I think it's been discounted
already.
So,
okay.
Just looking for a Canadian stock, it looks good. Sell it if it drops below 130.
Got it. Oh, your next top pick is Campbell's on the NASDAQ. Very famous company, obviously. But what do you like about Campbell's moving forward? Because they haven't been doing that well.
No. Yeah. You don't lose almost half your value, right? And so this is one of these situations where I'm starting to see some good volume around where we're at right now, and potentially a bottoming. So not a little bit of a dividend as well. But you think of, I think it's called the Campbell Company. I'm not sure it's called Campbell Soup, but I don't know actually what they're called. They're trying to get out of soup. Or be known as a soup company into snacks. And I think, people are aware of the story. So I think, they've got the potential and the desire to turn around. The U.S., especially with the stock market listed companies, have an amazing way of churning themselves around, where they've gone through a situation like this. They rebrand themselves. They're always, very aggressively trying to reconfigure what they're doing. And they're looking at that stock price. So I think now, with some of the things that they've been doing for the past little while, acquiring some snack companies and so on. I think that's going to pay off. It's going to take a while. And so I think this is an opportunity to buy. Now, just like, with CN, great company, will probably be around for the next 150 years. But I say sell below 130, right? So for this one, if it drops below 29 and you buy it today and it drops below 29, you want to start reducing it. So small position now.
And it's at 31 now?
Yeah, just a trading rate around that.
Got it. Okay, let's get to your third pick, which is Esco Technologies in New York, engineering for gas and electric. How big of a company is it?
And some defense work as well. This is an earnings momentum play. Clearly, you can see from the chart some big jumps And so it's become a new company, right? Like, not too much before the chart here it was under $100. And so it's done quite well, and I think it's got a lot of earnings momentum. So this is another company I think is got a lot of potential to grow, so this is one of these earning momentum plays that is part of my portfolio.
Is it a big company?
Not huge, but I think they can go a lot bigger. And you can see the market cap here. Is that 4.7? I'm sorry, I should know what this is.
4.7 billion, yes.
Yeah. So.
You think they're a growing company?
Yes. It's earnings momentum, and along with that would be growth. So top line, bottom line growth. And so the fundamentals are going to relate to the price, obviously. So I don't own any of these positions yet. So I'm planning on buying them and using some of this cash that I've had to buy into these companies. I know I mentioned I'd be selling, right? But I would be selling other positions to raise cash. These are new positions. So something like a Campbell Soup, I think, is a good value right now.
Got it. Okay. That is all the time we have. Jeff, thanks for coming in. I appreciate that. We are going to leave it there for Market Call. We'll see you again on Monday. Thanks for joining us. A look at the markets as we head to a break.